Thank you, John. Thank you to the economist. A very warm welcome to my fellow panelists, and of course all the people listening this afternoon. Some very interesting questions. I will try and go through them as quickly as possible. Are the banking systems in a position to contain the recession and boost the economy? Well, I guess, John, this depends actually on who you ask. If you ask a banker, I guess the banker will be a little bit more positive. If you ask a regulator, the regulator will refer you to his actions and his rule books. And if you ask an investor, I guess he will start looking at whether new NPEs will start emerging or whether there are any other inefficiencies in the system. We have to admit that banking systems are inherently fragile because, especially under a crisis, because they are leveraged institutions. But my current assessment is that the Cypriot banking system is entering this crisis in a considerably more robust position. And I will give you a few reasons for this. First of all, the capital levels are at very high historical levels. The BOC's Q2 CET1 level, for example, was at 14.3%. The banking leverage within Cyprus is very low. There is ample liquidity. We are at the final stages of dealing with our NPEs. There is extensive management experience in dealing with crises. And I have to admit that we have seen swift supervisory action, we have seen regulatory flexibility, and we have seen very quick action and targeted action by the government. So all these, I think, point towards a banking system that can support the economy and the recovery. There is this talk about mainstream and alternative ways to finance the recovery. There is a very nice phrase by the Vice Chairman for Supervision of the Federal Reserve, who referred to the actions to support the economy by the Federal Reserve as a kaleidoscopic gallimaufry of actions, which in plain English means that there are actions that change frequently and have a heterogeneous mixture. And of course, he called them like that because this is the reason to finance a recovery implies that our economy needs to find the best medium to ensure that credit and finance flows in the economy to support recovery. Now, what have we seen so far in this crisis? We have seen banks continuing to lend. We have seen banks granting forbearance and continuing to grant forbearance to their customers. We have seen actions by the central banks, the ECB, the Federal Reserve, to ensure that there is a smooth sovereign market, debt market in Europe and in the US. And of course, we have seen action by our local government. So it doesn't really matter how you call them mainstream or alternative ways. The fact remains that those measures need to be there when they're needed, quickly. And if there are secondary effects, of course, they have to be dealt later. NPEs, are they crucial more than ever? Well, when you're talking about NPEs to a Cypriot institution, obviously, it's our everyday life. We started from post-2013 crisis with 65% NPEs in our balance sheet. And we have worked very hard the last 7 years to actually bring them down and actually enter this crisis at the final stages of our recovery. Now, why is it important? It's important for two main reasons to get rid of NPEs. The first is that you free capital that you can actually use for the new problems you might have because of COVID-19. And the other very important reason is because you also have human capital that is dealing with these legacy NPEs, and the quickest you get rid of them, the quickest you will deploy these human resources to actually deal with any new issues that you might have from this crisis. Is there a risk for a new bank crisis? Well, dealing with COVID-19, I would call it a known unknown for the industry. The known part is that we know its problems. We probably know quite well how to deal with them. The unknown component, of course, is that we don't know the duration, and we don't know if it will leave any secondary effects or any permanent damage into the economy. At BOC, we make sure that we have the necessary products, the necessary policies, the necessary determination in place to deal with any new problems that we might face. And although a bank crisis can never really be excluded, we are pretty comfortable where we're sitting as an institution. A couple of words on the new normal and the fintech revolution. Obviously, the new normal following a crisis points towards acceleration of digitization and the embracing of new technologies. This is experienced by both companies, societies, consumers, and I'm not going to go through the statistics of technology, fintech, banking disruption, because we all know them more or less. In my mind, for banks, we need to embrace change and ride the wave of the fintech revolution. There are many ways to do that, but definitely as an industry, we need to become more agile. We need to either partner, create, or do a common strategy with a fintech if possible. Definitely, we need to flatten the structure. And as McKinsey has so nicely put it, in this new normal, we need to learn how to learn. Thank you, Joe.